Good morning. Thank you for the chance to share some of our research from Ateneo Policy Center today at this meeting in Bangko Sentral ng Pilipinas. I would like to thank the organizers, Governor Ben Jokno, Dr. Francis Daquila, and colleagues in the bank for the kind invitation to join you today in this important discussion. My brief remarks will focus not so much on the specific policies of labor and employment policies, but it will more focus on our pandemic management response. And my argument is simple: if we don't get the pandemic management response correct or better, no amount of fiscal or monetary stimulus will be as effective as it could be because of the continued chilling effects created by pandemic mismanagement. Let me be completely blunt. So let me explain my point through this presentation, and I hope it is useful in today's discussions. First, the outline and my main messages. First, the pandemic response background in a nutshell is on-again, off-again lockdowns. And what this produces is uncertain and shaky recovery. So we have to get out of this cycle of on-again, off-again lockdowns. And the only way to do that is to actually build the key pandemic management responses that would build confidence and strengthen the key organizations and institutions that will be important in managing the pandemic itself and the risk of new variants emerging. What are those? Well, the first one is to fix containment. The spread of COVID-19 in the country so far in the past over 18 or 19 months has shown us that we have not been able to successfully contain the disease. And so it began to threaten our health system very, very quickly with each surge. And this pushed us back to the final option, which was to lock down the economy. And the lockdown of the economy is one of the most costly pandemic responses that any country can put forward in order to stop COVID-19 or at least temper its full impact. Other countries have been able to contain the disease, slow the spread, while actually allowing various sectors in their economies to continue to function. Hence, they were not as affected economically as the Philippines has been. The second element is obviously vaccination. And there is still much that we don't know about COVID-19, but the emerging science and policy practice, there is a strong consensus that vaccination and basically increasing the vaccination rate towards 70% or even beyond 70% could actually be ideal in terms of mounting a recovery from COVID-19. And I argue here that fixing containment and mass vaccination results in improved psychology of recovery. And the final point is that there is now a growing view that we cannot keep the mobility restrictions at the lockdowns forever. There must be some adjustment, otherwise the mounting economic costs begin to compound the adverse health impacts of COVID-19. So there must be some kind of balance struck soon. And the challenge for countries, therefore, is to begin to move from pandemic to endemic or begin to live with COVID-19. And this kind of strategy to begin to open up the economy and begin to instill confidence in populations to begin to live with COVID-19, there needs to be a number of confidence building measures in order to change the psychology of peoples and countries towards accepting COVID-19 more as an endemic rather than as a pandemic. And this will be tricky, obviously, because there would still be some health costs and there would still be some risks. But many countries are now thinking about a set of key investments and key policies that could bring these countries and maybe even the world closer to that situation where we begin to live with COVID-19. So those investments include inclusive and strong healthcare systems, mass vaccinations, as we mentioned earlier, and robust and inclusive social safety nets, including for the informal sector. And today's discussion focuses on our labor force. One of the emerging lessons from Asia, and I've heard several other presentations by ASEAN speakers in several conferences recently. And there appeared to be a growing consensus that the informal sector needs to have strong social safety nets in order for pandemic management responses to also be much more effective and to lessen the scarring that could take place with an aggregate shock like a pandemic. So let me begin by first showing you what the past over 18 months looks like. This is really a plot of the new daily COVID-19 cases in NCR. And I focused on NCR because we can very cleanly plot the number of cases against the lockdown regime, essentially the mobility restriction regime. And we can see here that we have been forced into lockdown or more severe lockdown at least 4 times in the past over 18 months. And what this suggests to us is that the country has always been pushed back into the most costly, most severe response to the threat of a surge. So in order to stop a surge, the country has to implement severe lockdown. This is, of course, well, one way to interpret it is that we are paying the highest price, the highest economic price, in order to protect our health system from collapse and begin to temper that surge. Unlike other countries that have not had to implement a severe a lockdown regime as we have, nor implement such draconian mobility restrictions as the Philippines has in the past over 18 months. Now, I just want to help clarify, and this is an idea I picked up from a recent meeting organized by the World Bank East Asia Pacific Office. And they explained that COVID-19 is not a typical aggregate shock because it affects both demand and supply in a very, very big way. It affects supply obviously because of the policy response of countries, which is to implement mobility restrictions and implement lockdown. And ideally, most countries will implement this in the initial case, strengthen their healthcare systems, their containment systems, and then shift to a more cost-effective way of containing the disease so that they don't need to implement draconian lockdowns. But for a country like the Philippines, we have been forced back into draconian lockdown or very, very severe lockdown at least 4 times already. And this basically shifts the aggregate supply curve adversely and compacts it. The other effect, of course, is when you start locking down, businesses close and workers lose their jobs. And the initial buffers that workers have, such as savings, such as assets that they can pawn or sell, these are quickly exhausted if you're looking at a rather protracted lockdown or a rather protracted pandemic situation, which is what we have. So the economy actually slowing down and remaining weak in the past over 18 months results in also a tempered aggregate demand curve. And so what you have is an adverse effect on the supply and an adverse effect on the demand. And in addition to that, the adverse effect on the demand includes the chilling effect of COVID-19 itself. Not all consumers, not all investors will come out and actually engage the Philippine economy if they see that the pandemic management has not been very convincingly applied, that we have control of the disease, or that we are in good shape facing, let's say, the risk of a new variant, which is essentially what the world faces right now. As I make this presentation in late 2021, with the emergence of the Omicron variant. So this is important to note here that it's not a typical aggregate shock, because in addition to the fiscal and monetary uh, policies, countercyclical policies that we may put in place, we should consider the psychology of the people, the economic actors, the economic stakeholders, because as the bank economist I was listening to mentioned, the Keynesian stimulus may not be as effective given the other things that we need to consider, which includes the possible chilling effect on demand. And until that chilling effect is somehow stopped, mitigated, and some confidence brought back to consumers and investors, it would be difficult to imagine fiscal and monetary policies having their full effect. So the Philippines experienced one of the worst slowdowns. I won't belabor this point. The bad news is that we continue to struggle in terms of signaling our preparedness for emerging variants, even as right now, fortunately, we are experiencing, it seems from the data, a declining number of COVID-19 cases in the Philippines. So we are at the bottom of resiliency measures of at least 3 international think tanks. There has been some improvement in some of these measures because of the vaccination catch-up that is taking place. But the key point here, and I will just draw on our colleague from the bank who I think hit the nail on the head, the Philippines has been less successful in the region in transitioning away from shutdowns to a more efficient containment strategy. The tough response has imposed a big cost on the economy without delivering a commensurate benefit in terms of containment of the disease. So fixing the containment and slowing the spread of the disease and of any new variant is really going to be a capability that we need to build in as part of the confidence building measures of robust and inclusive recovery. And so how can we go about in doing that? I just want to note a few items here. Why are we forced into on again, off again lockdowns? Well, first of all, the healthcare system. It has not been as strong as we would like, and it has not been as inclusive as we would like. And governance issues still hound our healthcare system, and possible corruption as well. So this is unfortunate because this is not the time to actually suffer from these uncertainties. And certainly during a period when we need confidence in our healthcare system to basically take care of all of us, this is the time when some of these corruption issues are emerging and creating uncertainty and concern. There has also been questions of our health workers receiving enough resources or being protected enough from the disease. And so these are things that actually signal a lack of confidence on our part, a lack of robust systems on our part, which cannot be good for our efforts to recover from the pandemic. Are social transfers sufficient? This is the other key element that more resilient countries seem to have demonstrated. You provide social protection, social transfers to people, and they comply more readily and more effectively against towards mobility restrictions and should it be implemented, lockdowns. So that has not really been the case, it seems, and so this is one image that I got from one part of the country. This is in Cebu. And it's a poster that says, if you cannot feed us, free us. The spread of COVID-19 is not our fault. Stop the discrimination. So this signals a weakness in our pandemic management, in the sense that there is a lack of supporting mechanisms for the mobility restrictions and lockdowns, because ideally you would lock down many people at risk of COVID-19 spreading, but you would also ensure that they have enough resources to survive under lockdown, and so that they don't get hungry, they would have sufficient incomes to acquire what they need in order to subsist. And this has not necessarily been the case. And since we're talking about labor and employment today, we should note that a big chunk of our labor force actually works in the informal sector, and they are considered daily workers, no work, no pay. And they have essentially informal contracts and not enough formal insurance mechanisms. So for these many workers, depending on the estimate, it's about 11 to 18 million workers in the Philippines are working under these conditions of informality. Um, they do need to be covered by adequate social protection and social safety nets. Otherwise, we cannot expect full compliance with mobility restrictions and lockdowns, because the alternative for them is actually quite bad, maybe even worse than COVID-19, which is to go hungry. So, at the time of the president's SONA earlier in the year, at least one senator noted 19 months of lockdown with only 2 months worth of social transfer. And this was, of course, something that was easily a weakness, easily spotted by many in terms of the pandemic management response of the Philippines. Local governments have actually stepped in to provide some of this social protection and some of this social safety net, but I think there is widespread agreement that we could have done better in terms of stronger social protection. The cost side, of course, of this, and of course, as economists, we must consider this. We cannot continue to provide large social protection to a large part of our population, because this will be essentially depleting our resources as a country, especially under an economic slowdown. So there should have been a sense of urgency in terms of improving the very things that underpin a more effective pandemic management response that would lower the risk of surge and give us back confidence to begin to open up the economy. But that was not necessarily what took place during the earlier part of the pandemic. So since we're talking about firms also, these are just some figures from the recent World Bank presentation that I wanted to cite. And if you're interested, these are available, I presume, on the World Bank East Asia Pacific website. From a data gathering of micro, small, and medium scale enterprises that they conducted, they showed that smaller firms were hardest hit, larger firms were more resilient, no surprise there. But it also paints a picture of very unequalizing impact of the pandemic. And in terms of the support, public policy support, it appears that the relatively larger firms, were much more effective in terms of tapping this kind of support. Again, not a surprising result, and something that we clearly need to consider and possibly improve on if this is also the case for the Philippines. I have a feeling, even though I have not seen yet the data, that this could be a big concern for our many firms, especially the smaller firms, because again, typically the larger firms are able to adjust much more quickly, such as transitioning to electronic platforms, online platforms, to continue to conduct commerce. Those are usually the savvier firms, the ones with access to technology, the ones with entrepreneurs who have more effective economic and social networks. But that's not necessarily the case for many much smaller firms. They do need some support in order to continue to survive. So is contact tracing efficient? This is the other element. Obviously, there have been concerns about our contact tracing. I'll leave it there and I won't belabor this point. We still need to improve the effectiveness of our contact tracing. And we do need to improve how we collect our data so that it can also help make much more evidence-based our decisions on the mobility restrictions and other pandemic management issues. As I understand, there are already efforts to integrate the data on travel and mobility. It's not yet clear whether they have been successful in applying this towards the policies, but this is obviously a direction we need to take. Finally, is COVID-19 testing adequate? I think there is growing concern that our COVID-19 testing is still not adequate. And it also reflects the lack of data and the lack of evidence base that could have been guiding us better in terms of much more nuanced mobility restrictions and lockdown policies. There has been talk about targeted lockdowns in case a new variant emerges. That sounds good on paper, but obviously you need the data and the systems in order to implement targeted lockdowns, catch the risk of surge early, and implement that more nuanced policy much more effectively with data and with the evidence. Part of that data and evidence obviously comes from testing. And I should add that testing, especially if it shows immediate positive results, could also be part of the confidence building measures, both across firms and also across the public sector and major parts of our economy, including in tourism. But unfortunately, this is an investment we have not yet been making. One thing we have succeeded in, which is a good sign, is of course the 7.63 million jab in the past few days in early December, which is a very strong drive by government, including local government units, to increase vaccination. The emerging information that we're gathering is that we're close to the target of about 140, 150 million vaccines imported by 2021. And so the challenge, however, is to ramp up vaccination. So these kinds of results are actually good news and something that we should try to support and continue in order to reach higher vaccination rates. Right now, in terms of the target population, by one estimate that I saw, the vaccination target is, the vaccination rate is around 45%, which is still not obviously not close to the target of 100% of the target population. And by the way, the target population initially was about, as I understand from the doctors and scientists, about 70% of the population. This target has since been moved by many other countries that now target higher vaccination rates and higher vaccination coverage in their populations, primarily because they have abandoned the expectation of herd immunity. With the emergence of new variants, as I understand the emerging science, there now is a confidence building step of increasing beyond 70%, vaccinating 70% of the population. And countries like Singapore have actually targeted even much higher than that, even at 90%. And I understand this is the case also for other countries like Portugal. So I will begin to see if I can do that, wrap up my presentation by showing a few concerns that we should address moving forward. And primarily the risk of scarring in our economy, in our society. How does the risk of scarring affect us? Basically, these are the crisis effects that may have medium to long-term lasting impact on our economy and on our society. And there are several that have been pointing out by various analysts. One is the damage to human capital. And so there is a potential unequalizing effect of the crisis due to the imbalanced, uneven capability to engage in crisis coping strategies like online education. So our education system needs to rapidly upgrade in order to ensure that the vast majority of our young people are not left behind, including, of course, the more modernized, more capable education institutions. The risk of a deep impact of high public debt. So there is concern that our debt to GDP ratio has actually dramatically increased and could impact many things, including the way our rating agencies see our fundamentals as a country, our macroeconomic fundamentals. there is a growing need to focus on the effectiveness and efficiency of our resource allocations, so that we don't waste these resources, given the presumably tight budgets that we will face in the coming years, and tight budgets due to also a slightly delayed and weak economic recovery that we are still facing. Um, there is also the risk of chilling effects on investments and on entrepreneurs. And this is just the data set of Bangko Sentral, which is very, very useful. It shows us still quite a bit of improvement that we need in terms of the current quarter, next quarter, but also perhaps the next 12 months. There have been some improvements in the recent survey waves, but we hope this is sustained and this is not knocked down again with the implementation of, you know, let's say mobility restrictions again, or lockdowns again. So the other part I wanted to flag before I end is also the unequalizing effect of the pandemic. We may come out of this with some economic recovery, but with deep inequality scars. And I just wanted to point out that presently the vaccination performance across regions is highly, highly uneven and very much concentrated on NCR, Calabarzon, and even places like Davao region. And there are many regions lagging in terms of vaccination, likely because of lack of access to vaccines. And BARM, for instance, one of our poorest regions, if not the poorest region in the country, is way, way behind in terms of vaccination. And if you just look at this snapshot of where our vaccination is right now, even as we are trying to recover our main engines of growth as a country, it shows us the risk of inequality, a very uneven recovery across the Philippines. And I will also note that in the run-up to the May 2022 elections, this kind of a situation may also have an impact, because part of the confidence building measure of getting people out there to vote and to engage in the democratic process is also this health environment. And we all know that vaccination is a big, big part of that confidence boosting measure that we can take. So hopefully this is addressed very quickly in the next few months, hopefully more effectively and in a short manner than in a protracted manner. And obviously it has both economic and political implications if that is not the case. And so I end with a few points. First, herd immunity is no longer a practical target, at least according to the emerging analysis that we have seen. And the challenge is to manage hospitalization and mortality. There is a growing confidence from the emerging evidence on mass vaccination. We need to strengthen the health and social protection systems as part of our agenda for recovery, but also for building back better in our expectation of aggregate shocks like COVID-19 and pandemics now affecting the world and our part of the world. Obviously, this is presumably where the pandemic began in Asia. And so therefore, part of our lesson should be to build some of those systems in a more robust way so that we don't suffer the same fate as what we have encountered. And then maintaining strong test, trace, and treat systems and quarantine systems as part of our more effective containment strategy. Hopefully, this will be data and evidence-based. And this is one of the key missing ingredients in our capabilities in the past pandemic period. And then to ramp up boosters and prepare for possible new variants. And hopefully, the emerging science will also equip us to respond more effectively to these emerging risks. And again, the challenge for a country like the Philippines is to catch up in terms of vaccination, build that more cost-effective containment strategy, and begin to address the psychology of recovery in favor of being able to live with the disease and manage the risks so that economic actors will shed the chilling effect of COVID-19 and the past challenges that we have had in the over 18 months of pandemic. I'll leave it here, and I want to thank again the organizers for the chance to contribute these thoughts to today's discussions. I look forward to our discussions later.